Welcome to another edition of Focus on Alternatives, brought to you by ADISA, the Alternative and Direct Investment Securities Association. For more educational content like this, please check out the resource library at adisa.org. My name is Greg Mausz. I'll be your host today, and I'm joined by Michael Underhill. He is the Chief Investment Officer at Capital Innovations and the Portfolio Manager for the Cantor Fitzgerald Infrastructure Fund. Michael, thank you for being here today.
Great to be here, Greg.
So, Michael, we've known each other a long time. We've been attending these ADISA meetings. You are my go-to guy if I want to discuss infrastructure. I think you even wrote a book about infrastructure investing. When was that?
So, in 2009, I was asked a question by one of our clients, California Public Employees Retirement System. And it was a simple question asked by the Chief Investment Officer of CalPERS. What is infrastructure and how do we invest in it? So with that in mind, I thought it'd be a good opportunity to write a book so we can hand it not only to the CIO of California Public Employees Retirement System, but to the entire board to really define the asset class, how to access it, how to build a benchmark, what subsectors, because infrastructure is an asset class, it's been growing for decades. And that book was a desktop journal that created a series of white papers, over 120 white papers after that book. I got a request from the CFA Institute to create content because that book led to more questions around what is infrastructure, how do you invest in it, how do you allocate to it, how do you build a diversified portfolio? And even present day, we still get requests as a result of writing that one book.
That's impressive and interesting. Infrastructure investing, you mentioned it, has continued to evolve over time. Let's dive into that. What are kind of the big mega trends that are driving infrastructure these days?
So that's the $50,000 question. Megatrends. What are they? How do you invest in them? And quite candidly is, what are they driving? The three big megatrends. First, energy transition. In a world in which artificial intelligence is consuming 3% of all U.S. power generation electricity, and by 2030, less than 5 years from today, it'll consume 43% of all power generation electricity in the U.S. Rapidly changing adoption. The shift from coal-fired power plants in the U.S. to natural gas from 2005 to 2023, that shift from coal to natural gas reduced carbon emissions by 24% in the United States. But not only did it reduce carbon emissions, but it increased base and peak load power. Power and energy that powers our economy, industrial manufacturing, production, and think about just the entire grid. That energy transition has been slow, but it's been accelerating. And it's not just hydrocarbons, coal to natural gas. You think about solar, wind, hydroelectric, and my favorite, nuclear. Nuclear's been around for 50 plus years. And when you look at the technologies in large-scale nuclear reactors in my home state of Pennsylvania, 3 Mile Island, there's now discussions of restarting 3 Mile Island with safe, compliant, new technology for nuclear energy. That's sexy. But what's even sexier? SMR, small modular reactors. The technology that's been around for 50 years in Navy subs and aircraft carriers, using that kind of utility scale power generation for cheap, clean power to power everything within our economy. And it's right within our grasp.
I've been hearing more about those small nuclear reactors, but how much of that is here in real time? Or are you finding investment opportunities where you can actually do that, or is it still in research and development phase?
We're not only finding opportunities in public and private markets in SMR. For example, if you look at some of the publicly traded companies, whether you're talking about Oklo, Sam Altman's publicly traded company that's focused on small modular reactors and power generation, but also some of the technologies that facilitate SMR, small modular reactors. And now we're starting to see an increasing frequency pattern of investment where small modular reactors are being co-located adjacent data centers. Why are we seeing this? Because utilities are seeing such a large amount of electricity consumption from these data centers, in which you've seen thousands of data centers being built in the last 2 years. With the advent of OpenAI and ChatGPT, data center development has gone parabolic. And the need for power and energy, as I mentioned, 4% of all U.S. power generation today, 43% in less than 5 years. We have a power transmission problem and we have a power generation problem in this country, and it's the insatiable need for power. And so what you're seeing now, the newly appointed Energy Secretary, Chris Wright, On February 9th, he released his 9 pillars of energy independence and security. For the first time in the history of the United States, we actually have a cogent energy policy in the United States, and it involves oil and gas and nuclear, large scale, and SMR, small modular reactors, but also wind and solar and hydroelectric. So as you can tell, I get really excited about energy, right? Because it's powerful, it's a great investment opportunity, and it complements some of the things that are going on. That first big megatrend, energy transition, that's just one. The second big megatrend, digital transformation. Think about the Internet of Things, robotics, artificial intelligence, the fourth industrial revolution that's taking place in this country, around the world for that matter. And you see roughly 6 billion devices being connected to the Internet of Things, smart homes and metering. It requires not only data centers, cell towers, the shift from 4 to 5G, in which I was in San Diego last week, in downtown San Diego. I looked at my phone and I was in a 4G area. Imagine that, in a major metropolitan area. We're still developing 5G technology, and the physical infrastructure towers are still being developed and built. Those are great investment opportunities. So data centers, cell phone towers, fiber, and the need to co-locate fiber in your data centers and carrying data. It's been going on for 30 years, and now with this industrial renaissance and with the digital transformation, you're seeing both rural as well as urban fiber that's being developed and built. And last but not least, within digital infrastructure, that digital transformation, you're seeing the last food group, satellite. And you think about satellite operating companies, we've invested in infrastructure debt within satellite operating companies. So think not only Starlink, but other companies there are multiple companies within the satellite opcos operating areas for physical infrastructure. And again, last week in San Diego, I was in a car. We were going to the airport. I look on my handy Twitter account, and what do I see? Vietnam now has access to Starlink, right? So what Elon's doing and other companies are doing is facilitating the digital transformation, that connectivity, so we can have critical communications. And whether it be Vietnam or, heaven forbid, Ukraine or sub-Saharan Africa, they can have access to reliable telecommunications, facilitate communications, operate their economy, and become more efficient as an economy. And the connectivity is just nothing short of stunning. And that's digital infrastructure, that transformation, that's the second big megatrend.
You touch on the satellites. I've spent a lot of time tracking what's going on with the space development. And so you mentioned Starlink. I think as of now, there's roughly 14,000 functional satellites in space. Literally half of them are Starlink satellites. And it's not only SpaceX, there's multiple now rocket providers launching up satellites, weekly. And they're doing all different types of not only scientific research, but to your point, conductivity, data, tracking, the intel that we can get from looking down from space on our human behavior and what's going on with people's movements, and then allowing city planners and businesses to be able to really serve their constituents or their customers better. Okay, so we've talked about energy, we've talked about digital. Is there a third megatrend?
Absolutely. The third big megatrend is enhancement of aging infrastructure. And when we talk megatrends, these are 20, 30, 40-year trends. And when we talk about the enhancement of aging infrastructure, let's just take a look at the United States. According to the most recent American Society of Civil Engineering report, the United States is a C- student. I don't know about you, but if either of my boys came home from school with a C- report card, there'd be a serious discussion at the table. So there's significant amount, i.e. $3.4 trillion worth of investment that the United States needs to make just on our own infrastructure in this country to take us from a C- student to a C student. And when I talk about enhancement of aging infrastructure, think about the Federal Aviation Administration. The FAA system is 55 years old. You think about some of the unfortunate events that we've seen just in commercial aviation and some of the absence of investment in places like Flint, Michigan for water, or heaven forbid you look at transport, whether it's a bridge in Minneapolis or a bridge in Pittsburgh, those things falling down because there's just an absence of investing in existing infrastructure just to retrofit, maintain, and enhance the existing assets that we're using on a daily, weekly, monthly basis. From the time you wake up to the time that you fall asleep, you've interfaced with infrastructure 20, 30, 40 times. I get up first thing in the morning. First thing I do is I go to the washroom. Utility infrastructure. Second thing I do, check my phone. digital infrastructure. I get in my car, go to work. Toll road, infrastructure. These types of things in which hundreds of millions of people in the U.S. interact with infrastructure hourly. These are the things that are critical assets, not nice to have, but must have essential assets in which $3.4 trillion investment opportunity to invest in the upgrade of infrastructure in the United States.
Thank you for laying that out. And you make a great point. Infrastructure is kind of all around us, affecting every part of our life. Are the investing opportunities equal in all three of those megatrends?
Actually, energy is the largest area, roughly about $112 trillion opportunity set. Digital, close second within that sort of $20 trillion opportunity set. And enhancement of aging infrastructure, just in the U.S., it's about a $3.4 trillion opportunity set. But if we look globally, enhancement of aging infrastructure, it's probably closer to $90 trillion.
Those are impressive numbers. A lot of capital is needed there. Is the return opportunity equal across all three of those megatrends?
Great question. Simply put, no. There's core plus, value add, opportunistic. So think using almost real estate nomenclature, right? You can buy something that looks like a bond. It's more core. So think like a utility, water utility, electric utility. Something that's a bit more core plus. So think like a transportation asset, a little bit more economically sensitive. Value add, in which maybe the asset's not distressed, but the seller's distressed, and someone would come in and actually execute operational improvement. We have a platform we've invested in energy where all the GP does is go in and they buy coal-fired power plants, decommission the coal-fired power plant, conduct environmental remediation, convert it into a natural gas-fired power plant, and those returns are in the 15 to 20% range. So admittedly, core plus, almost opportunistic. And when you look at things a little further out the curve, they look more like infrastructure light, said another way, services, picks and shovels that are adjacent to infrastructure. So think some of the GPUs around these data centers, in which you saw the recent CoreWeave IPO last week. We invested in the debt of CoreWeave, not the equity, because we saw that as being a different way to execute our idea in a more risk-mitigated manner.
Michael, thank you for walking us through that. Any closing thoughts for the audience?
Well, I think what we've seen over the last 30 years, pension funds, endowments, foundations have been investing in infrastructure for not only inflation-protected income, but some modest capital appreciation, and for the diversification benefits for their pension funds, think institutional investors. When we gaze upon the wealth management space, less than 1% of all clients have any exposure to infrastructure, retail clients. And if they do, it's typically within the energy space, so very disparate. So what we're seeing is nothing short of stunning in terms of the democratization of infrastructure as an asset class. In not only accredited investor space, that's only like 10%, 10.6% of the U.S. population, but the other mass affluent, that's where we're seeing an opportunity for diversification, inflation-protected income, and help your clients protect against, admittedly, is a complex and volatile market.
Well, in summary, I'm hearing that basically all roads lead to infrastructure investing. Really appreciate you taking the time out and walking us through all different aspects of these megatrends and how they're affecting our lives every day. And thank you for listening to another episode of Focus on Alternatives. Again, for more information like this, please visit adisa.org and stay tuned for our next episode.